The problem is, and actually the figure that Rachel Reeves quoted was that 3/4 of farms would not be affected.
Yeah,
And
talk to me about this.
Well,
See the value of land?
Yep.
It does not return the amount. The land that the farmers work does not return
The value
proportionally
Yeah,
the value of it.
absolutely.
of it. Yeah. I feel like don't get overwhelmed yourself with it because, like, I feel like as farmers, you do so many jobs. Like, you're an accountant, you do your books, but it's like seek help, go and speak to an accountant about it.
What percentage do you think will not be able to avoid it, and what percentage will be able to, with proper succession planning, avoid this tax?
Stop it. That's enough. That's it. The one time, one compliment. That's it. It's a pain in the ass. I've been Cammy,
I've been Iona.
and we're all
Fed by farmers.
Hello and welcome to the Fed by Farmers podcast with me, Cammy Wilson.
And me, Iona Murray.
This is I'm not quite an emergency podcast. I say emergency podcast because that's what they call it on the rest of politics.
Well,
but
I
it's
like
a emergency pod. Big news. There is not going to be much fun had in today's podcast. I can tell you, it's very serious stuff. We have Graeme Bryson from Dains Accountants who's joining us.
Yep.
He's an agricultural accountant. We dive pretty much straight into this. I'm terrible. I don't even ask him his background and stuff like that. But he is from a farming background, and if you listen right through to the end, which I think you will, because the information here is unbelievable, then you'll hear a bit about his background.
So the reason we've had doing an emergency podcast is because of the budget.
The budget, yes, of course. This is about the budget. I'm doing it again. I'm jumping ahead. I'm thinking of all the interesting things he said. Yeah, the budget. We've been absolutely shafted. Mm-hmm. There's no other way to really dress it up. Like farming's been shafted, and it's just a difficult one to really. Difficult one to find the positives. There is no positive.
There's positives,
but the negative can be slightly less.
Yeah, and we can get plans in place.
Yes, so there's no positives, but it might not be as negative as you first think. And I think in this podcast you're going to hear some great options that you can then take to your solicitor and your agricultural accountant and discuss it. Yeah. And all the details for Graeme are in the show notes below, and you'll be able to find him there and contact him or Dains Solicitors if you are needing a solicitor, or maybe you just want a specific agriculture, or you like the cut of his jib because he speaks very, very well and he's from a farm.
Cut of his jib?
Yeah.
What is that?
I don't know where the cut of his jib comes from, but it means you like his mannerisms.
I loved his mannerisms.
So you like the cut of his jib?
I loved his jib.
Yeah, okay, that's on that note. Thank our sponsors, Iona.
Thank you to Crystalyx and Tracesure by Animax.
Yes, Crystalyx and Tracesure, they keep this whole thing going. They put a significant amount of investment into this podcast and support us massively. So you will see a couple of their adverts through this podcast. Do consider them when you come to bolus time or energy bucket time. Anyway.
Could also just say, for any farmer struggling, reach out, RSABI and RABI if they are going through a hard time. Very
good point. Speak to this is one of the great ones where we're all in it together.
Yeah.
So speak to your neighbour. Speak to a friend. I've been on the phone constantly since this budget.
Yep.
Constantly speaking to people. Even though massively I'm not impacted, they are.
Yep.
And it's great to share ideas and discuss alternatives. And some of them we talk about in this podcast. So the number for RSABI and RABI are on the screen just now. If you don't want to speak to a friend, you're really struggling, speak to a stranger. Mm-hmm. And if you don't like it halfway through the call, hang up.
Yep, nothing to lose.
Absolutely. Anyway, let's get started. Hello and welcome to not quite an emergency podcast, but a sort of special podcast with Graeme Bryson here from Dains. I was going to say solicitors, Dains Accountants.
Yep.
Dains
Hi,
Accountants.
Cammy.
Yes. Graeme, thank you firstly for coming in so quickly. After this budget announcement. The phone must be ringing off the hook.
Absolutely. It's been a bit of a shock the last 24 hours. We made a lot of predictions about what would come through in the budget. What they've done to the agri sector wasn't expected. We expected changes, but I don't think they've thought this one through just well enough, and a massive impact for everyone, a lot for everyone to think about. And the last 24 hours have been pretty busy just trying to interpret it, try to work out what are the options and what people can actually do to mitigate, the effects.
And see, for people who aren't sort of up to speed with what has happened, could you do a wee summary of the sort of main points?
Absolutely. The main points affecting the agri-sector come through in the capital gains tax and the inheritance tax changes. So the capital gains tax rates were predicted to rise, and they have. There's time there though. Okay, the immediate uplift in the CGT rates did happen yesterday. So that was an immediate uplift. Basic rate taxpayers 10% up to 18%. Higher rate taxpayers 20% up to 24%. But they've retained the business asset disposal relief, which people will remember and quote more as being entrepreneurs relief. So that's there for the moment. And that's £1 million of lifetime earnings, or you can make capital gains of £1 million in your lifetime. And for the moment, you'll still pay tax at 10% until 6th of April 25. It goes up to 14% at that date. And then it goes to 18%, 6th of April 26. Okay, so that relief is still there. That's important. And we'll probably come back to that at some point. Inheritance tax-wise, so this is the biggie. And agricultural property relief is the main relief for the agri-sector. And that's been there for all of my days, where you get 100% relief on the value of your agricultural property. They've now limited that. They're saying the first £1 million will get 100% relief. Anything over £1 million will get 50% relief. The problem is, and actually the figure that Rachel Reeves quoted was that 3/4 of farms would not be affected.
Yeah,
And
talk to me about this.
Well, she clearly has no understanding about the value of farms and where we are in life.
Where did they get that figure?
I'm unsure.
I've got somebody who wrote in about where they thought they did get the figure from.
Well, give us that just quickly.
Well, I'll do that quickly, and then farming families still get the same £1 million property value being passed down as everyone else. There is then an additional £1 million for agriculture that is tax-free, so farmers should only start paying when the property is above £2 million. Hopefully you can if this is highlighted, it might stop some people who own small farms in that 1 million to 2 million bracket from some potentially unnecessary stress. I get that there are some larger family farms which still may be impacted by this. I believe this is where the government have got the figure from, that this won't affect 73% of farms, as they're using the figure of 2 million.
But that's not right, is it?
So what they're bringing into play there is the nil rate band relief. So we'll try and avoid getting too complex here, but everybody's got £325,000 they can have in wealth before they start paying inheritance tax, or before their estate is exposed to inheritance tax. If there's a spouse that's a surviving spouse, then there may be 650,000, because the 325,000 can pass if the estate passes from one spouse to the remaining spouse. There's then a residence relief that comes on top of that, and you can get yourself to £1 million with the use of those reliefs, and then the agricultural property relief at £1 million on top of it. So there is relevance there, but you're pulling together a few different reliefs to get there, and often the agricultural property relief in the past has covered off and removed the agricultural asset from the estate completely. You then have other assets which are covered by nil rate band. So it does, to say the £2 million covers the value of the farm is unlikely to be the case. That'll be rare, that is the sole asset that we're working with.
Yeah, because I take it when we're talking about value of farms in terms of the inheritable asset, we're talking about the land, the buildings, the stock, the equipment.
Yeah.
Basically
Absolutely.
everything. So it's not just if your farm's worth 2 million, you could easily have $500,000 again in stock.
Absolutely.
Especially in the big beef or dairy places.
Yeah, so it's an interaction between agricultural property relief and business property relief that captures all of that. So the agricultural property is focused on the land and the steading and the farmhouse, as long as the farmhouse is appropriate to the farm and what they're doing. And then business property relief can come in and capture the business assets, which is your stock, your implements, your.
Also, we never had relief before on the stock.
No. It's always been there. But
right. Okay.
This is basically affecting both business property relief and agricultural property relief. So, if we just talk about agricultural property relief as covering all of that and the limitations that have been brought in and the effect that has, we'll capture the subject.
Yeah, and I mean, a lot of things we're going to talk about here are complicated.
Yeah.
take a bit of digesting, which adds to the worry and the stress for people. It's trying to understand it all.
Totally.
Absolutely. So the message I've been putting out today is very much there are still options and still planning that you can do. If we roll back, before this happened yesterday, I always classified as inheritance tax as almost a voluntary tax because there's so many planning opportunities. You could do various things during your lifetime to mitigate any exposure to inheritance tax. Planning opportunities are still there. It's becoming more complex, and each individual circumstance will be different to everyone else. So there's going to need to be a sit down. We're planning to speak to our agri clients and say, this is a review we're going to do with you over the next few months. You know, it's not a knee-jerk reaction. It's not, we need to do it today.
Yeah.
But over the next few months, we're going to sit down, understand how this affects them, and understand what their options are to mitigate the effect. Well, firstly, work out what the effect is, and then secondly, what can we do about it?
And will it be quite I know every farm business is different, but the situation be pretty similar regardless? So could we easily say that if you have a £2 million farm, anyone with a £2 million farm will be in a pretty similar situation? Is that fair to say?
Yeah, and there'll be options. You then have to look at what's the family, who you know, what's the future looking like, what are the plans? You know, I always say to people, don't change things for change's sake that don't fit with your long-term vision. You know, I always want to understand, where do you want to be in 5, 10, 15, 20 years? What do you see for the family? And make sure we're going along those lines, and anything we do fits with your long-term plans. So there will be a series of planning approaches which we can pull into situations. You know, so it's not going to be every situation is different, and every planning style is different. There'll be a number of styles that fit, and it'll be which ones fits best.
Yeah, I mean, overall, do you think it's a bad budget? How do you feel about it?
Very much.
Yeah, and what do you think the repercussions are going to be from it?
So I'm actually quite surprised that the predictions for growth in the UK, this is general, so this is not just the agri sector, but I'm actually quite surprised that the predictions for growth in the UK have just been watered down slightly. You know, I was looking at those this morning, and where it was 1.9%, they're going for 1.6%.
Okay.
I actually think it'll go way beyond that. I think there's such an impact going to come to businesses in general. Listen to Radio Scotland this morning. There was a businessman quoted, not in agri, but it does run a large business. He uses a lot of young staff in the business. Minimum wage has gone up. The employer's national insurance has gone up by 1.2%, and he's predicting that will cost him an extra £1 million a year. Now, I guarantee his business will not make £1 million a year.
Yeah.
So there's going to be an impact on efficiencies, staff numbers will be cut. He'll need to put prices up to pass on to the general public. So every business in those circumstances is really going to have to make changes. That's going to impact the economy. And I think they've not truly understood the effect that's going to have long term. And that's why I'm saying I'm surprised that the growth forecasts are still as positive as they're saying they'll be. You know, there's a lot of businesses out there where the employer's national insurance is really going to affect them big time.
Well, I think I saw earlier that before you even start adding the 1.7%, just dropping the threshold from 9,100 to 5,000 adds about £600 per year.
You're spot on.
Onto the wage.
Yeah. So if you look at an average employee that's earning 25,000 a year, you're going to be £800 to £900 more on employer's national insurance per employee.
Yeah,
so that's going to affect the agri sector as well, because 2-3 employees, that's an extra, you know, $2 or $3 grand.
But where does a small business? Now, I couldn't quite find the definition for this. I thought it was 5 employees, but I'm reading various things. When I understand it, that it doesn't apply to small businesses. Is that wrong?
So there's other reliefs that apply to small businesses that will take some of them out the equation. So, but generally, that is still going to apply. No, the agri sector will be affected by that.
Yeah, is small business based on employees or turnover?
Employees.
Okay.
And
for that purpose,
there's an employment allowance that comes into play as well, which has been increased. So there's a positive. We're looking for a positive in the budget. there's an employment allowance that's been increased. So
for the small business only.
That'll soften the blow.
So for someone like us, like we employ 2 people here.
Yeah.
Like that'll benefit us.
That'll help you. Yes.
But is it actually any better, or we just don't get hit with it? Is it? Are we actually any better off, or actually we're not getting hit with this change?
I think if you one or two employees, you might be slightly better off, but I wouldn't count on that as being a big impact on you.
Yeah. So it's these big businesses.
Yeah.
Are going to take a hammer
that are really going to be hit,
which means they're going to have to lower wages or employ less people.
Well, in some of these businesses, that's like the one I was talking about that was in Dains Scotland this morning. They'll employ a lot of young people. Minimum wage will come into play, so they can't actually lower the wages. They've got to comply with the regulations, so it'll be less people.
Yeah, and they're basically creeping up this minimum wage to. They're hoping by basically the next budget they'll just make them everybody the same. Yeah,
so the minimum wage brackets tended to go up by 17% yesterday, and the anyone over 21, I think it was 6 or 7%. It was increased by, so that's a big factor for businesses with a number of employees in the younger brackets. I spoke to a chap this morning who employs 400 to 500 people, and he'll take on 65, 70 apprentices a year, and he's saying that he's going to have to rethink that, and that it might go down to 40 or 50, and that was maybe a dramatic number. He was maybe being a wee bit exaggerating.
No, I mean, you've got to push your point. No, I get it. I mean, for me, as somebody who worked when I was younger for £2.80 an hour, and there'll be a lot of older people than me that worked for less than that when they were younger. When you're young, that's your time to learn. Like, that's your time to learn, and it's not about making money. It never was for me. It was about opportunities. It was about learning new skills. That's hence apprenticeships, etc. I don't know any of my mates that worked for pennies when they were 16 learning a trade that are moaning about it now.
Yeah, exactly.
They're working 4 days a week.
It sets you up.
Making a fortune.
Yeah.
Whereas if those opportunities aren't there because employers just can't justify it, like, we're going to see a big fallout from that.
Absolutely.
Off the back of it.
Absolutely. The government will need to come in and try and rejuvenate the thing in some way, so it could come back to bite.
Is one benefit of being a Labour government, you don't really need to worry about the long term?
Well, there you go. That's also a message that's out there today. Hold tight. And
that's Jeremy Clarkson. Did you see that?
Yeah.
Don't worry, they'll be gone in 5 years.
Crystalyx Extra High Energy Feed Blocks have been providing high energy supplementation to ewes, lambs and rams in the UK since 1978. Packed full of protein, vitamins, minerals and trace elements, Crystalyx Extra High Energy has been proven to increase live lamb numbers and improve lamb daily live weight gain at a cost of only 4 to 7 pence per ewe per day. To view the full Crystalyx range and find your nearest stockist, visit crystalyx-global.com.
It's a thought. I mean, it's a very Labour budget.
Absolutely.
A very Labour budget.
And they've spoken about it long and hard about how bad it was going to be, their deficit. And to be fair, I've actually seen an acknowledgement for the Office of Budget Responsibility that's saying they didn't have all the information that they needed. Now, to what extent that's relevant or not, I don't know, but there's a 22 billion shortfall or gap. They've really played it long and hard, trying to build up how bad the budget was going to be, trying to create a soft landing for the bad news. But I think they've underplayed the agri sector.
You're right that they were making it's going to be a disaster, so it comes down low. I always use there's a great reference to that, and I mean, there's nothing funny here, but there's a comedy show called Always Sunny in Philadelphia where Danny DeVito walks in and says to his kids, your mum's died. And they're like, what? How's this happening? He's like, nah, I'm just kidding. We're getting divorced. It's like, see, it's not so bad now. And that's almost like what it is.
Exactly. Absolutely. Absolutely.
But, could have been worse for families? Probably not. They're probably getting hammered as much as could have been anticipated. Capital gains could have been higher.
Yeah.
I mean, there was a lot of talk about 39% they were talking at one point, which is wild.
Absolutely. There's talk about aligning income tax rates, so which was extreme. I mean, even when we looked at that, we were like, it can't be. They just can't go that far. So it's going up. Probably if we predicted what was going to happen with capital gains, we might get close, in a bit of hope. So I'm saying that's reasonably okay. It's going to affect people. People are going to have to think about things. As I said to someone also today, sorry, I'm kind of getting back through all my conversations today.
So good.
Because that's how it's been. If you're selling a farm and you're thinking about capital gains tax, you know, the advice is you understand where you're going to be with your capital gains. You understand where you're going to, or what capital gains you're going to be exposed to. So before you sell the farm, you're going to have a conversation with your accountant who's going to say, right, by the way, if you get this, here's the capital gains tax exposure. You're going to be fully informed. You make a decision then, do I go ahead? Do I want to sell the farm because I'm going to pay that tax? That's what we'll be left with. Or do you say, no, that if that's what it is, I'm no selling. I almost predict the direction of travel will stay the same. You know, even when people understand what their capital gains tax liability will be, I would guess the reasons for selling the farm will outweigh that exposure to capital gains, even though it's a bit higher.
Yeah.
So the rates are up. There'll be more tax to be paid, but the person selling the asset, selling the farm, will understand what they're going to expose themselves to at different levels. So, and they make the decision.
I suppose one thing with the capital gains, and you'll know this better than me, because I would think most farmers would be in the lower tax bracket. So that would mean that theirs is going from 10% to 18%. Is that right? But are most farmers in that bracket, or are most farmers in the 40% bracket?
So, well, that's a good question actually.
What's the majority? You know, I don't need any specifics, but you know, your feel on it. What's the majority?
So with good support from their accountant, we spend time with a lot of farmers doing 9-month reviews. What's your forecast going to be to the year end? What can we do here? It more and more it's actually turning into, when we're finishing the previous year, what's the next year looking like, predicting what the profit will be. What do they need to do to mitigate the exposure? What do they need to buy?
Yeah.
Exactly. What do they need to sort? You know, is there a roof needing repaired? So get on with it. Make sure you get it done before a certain date. I think the profits are running okay at the moment. So if they're in basic rate, it's a high end of the basic rate band. You know, the dairy sector took a dip with the milk price. Interest rates are affecting the thing. Beef and sheep prices are running okay, so profits have been reasonable, but they're tending to spend the money, and that we'll come back to that point at a later point as well when we're talking about inheritance tax and the lack of cash availability, because farmers tend to reinvest. You know, as soon as you know things are going well, there's a spend. There's always a wish list. Yeah,
and I watched a fantastic TikTok earlier actually, and it's terrible. I'd never seen the guy before on my feed. He wasn't a social media guy, you know, he wasn't particularly flowing with it, but he was just trying to explain his story. And he was a 7th generation farmer, and he was talking about how they've built this. Yes, it's worth a lot of money now, but they've built this over 7 generations, and everything that's came to them has come back into the farm. And it's so true with so many farmers, like they just plough it all back in.
Absolutely.
You know, it's always a safe pound. You give a farmer, like if we talk about the support payments, like none of that's going to the Cayman Islands.
No, not at all. Exactly.
It's going to your tractor dealer or your local market or wherever it's going.
Yeah.
Can
I thought you were going to tell me your dad had an account in the Cayman Islands.
see, this might be a silly question.
No silly questions.
See right now, if everybody's panicking about the inheritance tax, can they just move it into their children's name right now?
So one of the tax planning points is about passing the assets down in generation during lifetime. You know, so absolutely. But there's other factors you need to think about. You need to think about capital gains, because even though there's a holdover relief that you can employ for capital gains. So if you gift a business asset down to your family, you can claim this gift of business assets relief, which mitigates the gain. What it does, it actually defers the gain. And it's an implication for the next generation. If they ever decide to sell the farm, they're not in such a good place when they decide to. If they decide to sell the farm, they might just keep the generations going, and that's, I'm sure, the hope of the parents at the moment. So yes, and that's part of the journey. But you might have, you might have some family planning aspects to think about there. You know, and it's not just a case of, right, son 1 gets the farm, son 2 might earn a bit or deserve a bit of the farm, but he might be too young. And it's all about the age and stage of the next generation and where they are in their life.
Yeah, and one thing we should, part of this podcast, our big drive of this podcast is to talk about solutions.
Yeah.
To try and, because my big worry, and I've said this on social media before, is the negativity out there. and like some people just sitting there wondering what they're going to do.
Yeah.
And if we can give a
Yeah.
wee sort of glimmer of light here in this podcast, or a wee bit of hope.
Absolutely. And that's what I want to do as well, is to say, you know, there is stress that has come from yesterday. The headlines are not great. The Radio 5 Live was talking about the agri sector there. There are solutions. You need to sit down and not with a knee-jerk reaction. Just take your time over it. Engage your accountant. Make sure it's an agri accountant that understands the industry. It's a niche industry with a lot of special rules that apply. Just take stock and where are we? What's the long-term plans? If the family's not an age where you're comfortable passing the farm down to them, because you need to be happy that they're going to be responsible about it.
Well, someone made a great point to me that I'd never thought of, is that it's not just that they're at an age that they're ready to take it on or whatever, it's that they're settled down with the right person.
Absolutely.
Because if you hand the farm down to them, they get married to the wrong person and that all goes to shit, then half that farm's away, potentially.
Yeah.
Does that sound about right?
It can be, and there's
Do we get prenuptials in this country? Is that just an American thing?
No,
No,
absolutely.
you?
No, you can.
So could you sign like you can't have half the farm if we fall out?
You could present that bit of paper over the
Nothing
kitchen
says
table.
What's
nothing
it
says
called?
love like a prenuptial
Exactly.
agreement.
Is it a prenuptial? Is there not another word for it?
No, I would
Is it
refer to a
prenuptial?
prenup. Yeah.
Oh yeah, prenup. I'm just thinking of it. Sure.
I prenups, yeah.
So, and there's things you can do with partnership agreements where it gets a wee bit complex if something happens to son and marital status and all the rest of it. The family will try and protect the asset in the best way they can, but there's always a risk, and is it a marital asset? Is it not? And that will be determined by the lawyers in terms of the timing of the gift, etc. So there is a lot to think about there. But again, if it's done in an orderly fashion, a bit of planning, a good lawyer, then it should be sorted out. It should be fine.
Yeah. No, I mean, that is one option, I suppose, as you said, pass it on. Someone did make the point to me, I have a question about passing the farm on, and they made the point basically that obviously the person's got to live the 7 years. So if the mother and father pass it on, they've got to live 7 years. It tapers, I believe. The tax tapers as it goes. So it's not like if they die in year 5, it's a total disaster. It's tapered.
Yeah.
Well, it's not great.
It's not great. It's still not great, no. But it's a disaster. I did like Ollie Blogs, Ollie Harrison did a good quote in Farmers Weekly. They're posting it. Said, "I can't afford to die now." And I thought there'll be a lot of farmers feeling that way. I can't afford to die.
Aye, keep them going.
So the question they had was, how does the person handing it over, the parents, how do they get a slice of that? Because am I right in saying they cannot have any involvement in the business, or they can't gain from the business once they hand it on? Is that right?
Okay, so you're talking about reservation of benefit by the sounds of it, so they can still be involved in the business, so the main or the best example of the point you're making, Cammy, is that mum and dad gift the house to the next generation. Mum and dad continue to live in the house and they don't pay rent. So when it gets to, they get to the end of their days, they've not truly given away that house because they've continued to live in it. They've reserved the benefit of the house. So the house still falls into their estate, even though they think they've given it away.
Right.
Yeah, that's the reservation of benefit rules. So,
Wow. There must be people caught out with that.
Well, there is.
Well, not if you've got a good accountant, I suppose, but...
And how will people know that that's where they live?
That's if you're smart, you just change your address to down the road.
Well,
You buy them a 1-bed flat in Kilmarnock and just pick the mail up once a week.
The question might come that right, okay, where did they live? And you give an address perhaps. Well, show us their quality of residence in that address, please. Show us their registration for voting and their council tax, and it unravels pretty quickly. So the main way of avoiding that is they pay rent, and that's a hard one for them to swallow as well, because either they gift it and then they move, they maybe swap houses. Farmers tend to swap houses, or they gift it and they say, well, we want to stay here for a bit. Yeah, we're not ready to move. We're going to need to pay rent to son, daughter, whoever's got the house. all right, so we've got to pay rent, and then the rent's assessed as income on daughter or son, so they're paying income tax on the rent.
jeez.
You know, so it becomes a bit of an ever-decreasing circle.
Yeah. It's so complicated.
And now I'm not wanting to go down a rabbit hole here, but could you then not have them as an employee to the farm? So say you've done this and they're still staying in the farmhouse and they've transferred the farm to you. Can they be an employee of the farm and get, say, $2,000 a month of a wage, which is kind of their pension from you? If you do that, you're still in the clear.
And if it's a
and charge them the rent.
If it's a farming situation, yes, you can do that, you know, and it just becomes a circular flow.
But you're okay legally,
yes,
because they no longer are benefiting; they're working for you.
But you'd want a lease agreement as well for them to be paying rent and obliged to pay the rent, just to demonstrate that it's done and the gift was a true gift, you know, and it was effective. So
yeah, that's it. No, and interest. That's what I had no idea about. God, they need to pay rent to you. But no wonder they don't want to sign it over.
So going back to where you raised the gift with reservation of benefit, the farm can be gifted down to the next generation, and I would imagine they're operating in partnership. You know, mum and dad and maybe 2 sons, and there's maybe 4 people in the partnership. So they can actually pass the farm down to the next generation and still be in partnership and even in a small way, you know, the parents might reduce their interest in the farm, but enough for them to have an earning, you know, an ongoing income.
And that would maybe go back to, we had Margot McGillan here, who's a solicitor, agricultural solicitor, and she made the point that a lot of farms might be owned by the parents, but the business is in partnership. And I'm guessing that's kind of what you're talking about there. Yes. You can keep the business in partnership as long as the asset is transferred. That's
right. You've got to be wary, and we spend a lot of time getting to the bottom of who owns what. If we get a new client, I'll spend a bit of time just saying, right, whose name is on the title here, just so that we understand, does it match up with who's running the business? Because it's important, you know, the worst scenario would be parents own the farm property, and they've come out of the business. You know, that's a disaster of a situation, because suddenly potentially the asset doesn't qualify for some of these reliefs. You know, there's an extra level of relief in there that they can get in terms of whether it's been occupied for agriculture for the last so many years. But it can create challenges and worries. So we'd always I'm always minded to keep the older generation as a partner in the business, even in a small way, just to cover all the bases. So,
okay, Graeme, we've got a few questions that people have sent in to us to ask, and joining us for this part of the podcast, delighted to say we've got Andrew from Farm Theory in Northern Ireland.
Ideal.
Andrew's big on the YouTube and TikTok these days. This is how I got chatting to Andrew. I've no interest in dairy farming, but Andrew makes it interesting because he's a pure geek.
Right, okay.
Yeah. Does that sound fair, Andrew?
Yes, in another life, I would have been an accountant.
Oh, there we go. So you've got a challenge.
So that's good, yeah. I like that.
So Andrew, do you want to kick us off with a question for Graeme?
The question I was going to answer, you've actually answered for me about gifting it and passing it on that way. So I have another question for you, which is, in your professional opinion, what percentage of family farms do you think will end up paying under this new tax policy? So what percentage do you think will not be able to avoid it, and what percentage will be able to, with proper succession planning, avoid this tax?
Okay, so that's actually a good question. A few factors and variables in that question. I think if people allowed themselves just to drift through and do nothing, the percentage that would be affected will be somewhere in the region of 60 to 70% as a minimum. With proper planning, I would suggest that percentage could come down to 20%. You know, I think there's enough opportunity there to be confident that you could remove some horrible situations in terms of exposure to inheritance tax. The other thing that we referred earlier to, the different factors, I think the question was about the £2 million value. Another asset that's coming into play is pension fund value. So that's coming into the inheritance tax world now. It wasn't before. So we've got to be aware of what value people have got in their pension funds, which might not be much. Farmers
Do many
often,
farmers have pension funds? I wouldn't honestly know. How many would?
There's a few. Some of the older generation would put a fair bit into pensions in the past and might be sitting with some fairly decent pension pots. The younger generation, I do believe, often think that the farm is the pension pot, and they just keep reinvesting in the farm. But the pension reliefs that they were able to get as part of the tax planning and the income tax planning, if they've got all the new kit they need, all the repairs are done, where do they go next with the pension planning? The tax planning might be pension contributions. So that was the percentages, Andrew, that I would suggest, would be exposed, and with a bit of work and clever thinking, we could reduce that quite a bit.
So another, Iona, you've got a question there.
I've got one here, yeah. So one thought we have had is whether family farms could be carried over to younger generations as tenancies, therefore protecting assets from being divided up in divorce cases, etc., but allowing forward planning. Can you inherit a tenancy, though, if you're also the tenant?
So if you're the tenant, you have the tenancy.
Says I'm sure lots of clever people will work these things out. We're not clever enough.
If you're the tenant, you've got the tenancy. You've got the right to the tenancy.
Yeah, but I wonder if they mean the parents own the asset and they're giving you the tenancy.
Yeah. I think that's perhaps what they mean. So you can still inherit the asset. You can still take the asset. I say inherit. If the parents decide to gift it to you, then they can do that. The tenancy will fall at that point because you then own the asset. So the tenancy comes to an end.
And it won't help you with any tax?
The asset's moved down from the parents. So there will be a help in there in that the parents have divested themselves of the asset. So just to pick up on the other point is can you inherit a tenancy? So if your parents are the tenants of a rented farm, it'll depend on the tenancy, the type of tenancy that is.
Yep.
Some naturally flow down the generations, others come to an end and the younger ones have to apply to take the tenancy on. So it'll depend on the terms of the tenancy, and we'll get into Margot McGill world there.
So this is a really good one, a really interesting one for you.
Okay.
That is totally outside the box thinking. So another question possibly for your accountant that I've just thought of. If you are young and you buy or are now gifted a farm, is it a reasonable idea that you should be paying into an all-life insurance policy? Held in a trust so it doesn't go into your estate on death, that would pay out and cover the inheritance tax on your farm when you die, meaning you could let it be inherited and the money for the tax would be there and ready. Not sure if it would be financially viable, but if there are young people being gifted farms now and they can access a policy at a much cheaper rate because of that, there's possibly some sense in it.
Yes.
Yes?
Yeah, that whole journey sounds quite sensible to me. I actually like the whole of life policies. I've
never heard of them.
Can we break that down? What does that mean?
Right, well, I'll tell you what I understand about them because, the whole formula doesn't work for me. And you basically, it's like a life policy. A life policy will often be until you're the age 65. If something happens to you, then you pay this amount every month and you'll get a lump sum if you die before you're 65. Yep. Once you're 65, that falls off the end of the cliff. You've paid all that money, you're still alive, and you've got no payback.
Right, okay.
It's gone.
Okay.
Whole of life policy is the same thing, except it is exactly what it says it is. It's your whole of life. So if you die at 65, 75, 85, 95, it'll pay out a sum of money. You're insured for your entire life.
Okay.
Now, you're insured for a set sum, okay? So the younger you start that, the lower the premiums will be monthly. And that can be quite attractive. And you go through your life and see you survive to something happens to your 85th birthday. You'll get the lump sum that they promised you. You will never have paid in enough to match that lump sum or go beyond that lump sum. It just beggars belief. But it's because of the number of people and the way the insurance companies work that lump sum is always disproportionate
Why is that?
Well, that's the question that I can't quite answer. I need an IFA to sit here and explain it all.
Okay.
But the point is that a whole of life policy is a very attractive proposition. You know, it's worth thinking about, it's worth looking at, and part of the planning that you might have with your farm, if you're sitting there with your farm and it's worth 3 million, we work out what its inheritance tax exposure on that. We might bring in an IFA to say, right, listen, can we insure against this?
Yeah.
You know, can we put a policy in place that will pay out enough to pay the inheritance tax? That's an option.
One big issue I could see with it though, that you imagine you'd bought a farm in the 70s, okay, and you thought, I'm going to do that. What genius in their right mind could have seen that farms nowadays would be worth what they are back in the 70s? So if you work out, if you say, right, that's what my inheritance tax will be now, that's all well and good, but in 50 years' time, like, you know, inheritance tax back then on this basis, if land prices could have been 20 grand, well, somebody that has you 20 grand in a policy,
it's not use.
It's no use.
Yeah, it's going nowhere.
£1 million, you know, in 50 years' time is going to be 10 grand now.
That's a scary thought, isn't it?
Oh,
that's terrifying.
Well, that's one thing that always annoys me when these politicians stand up and say, we are giving more money than ever to the NHS. Well, of course. Inflation's up 5% every time. Literally, if you give the same amount, you're giving less.
Yeah.
Like, even by giving more, you can be given less.
And the population's outstripping that as well, you know.
It's like they use these key things that we're giving more than ever, but it's, you know, is it more than ever?
Oh, it's just
based on inflation.
It's just bolster, you know. It's just to get everybody to back off, you know.
Aye, it sounds good. Makes a good headline.
Yeah.
But and is that a big downfall with that policy then? That how do you predict what you need?
So,
and actually, you need so much bloody money. It would make sense to insure yourself for that amount.
I don't truly agree with that. I think you can set yourself up based on where you are at the moment, you know, and understand what your inheritance tax liability will be, and say we'll cover that, you know. And if things move, if prices move, then we'll need to deal with that at a later point. But you can put yourself in the right place at the moment. And the younger you do that, the better, because your premiums will be less. But even at my age, you know, early 50s, dare I say, so you could still comfortably look at a whole of life policy, and
even at your early 50s.
Yeah.
Okay.
Yeah. So it's definitely a subject that's worth looking at, you know, and it's one of the options that's available.
Very good question.
I think we're quite far.
That was a well-worded question, by the way. That was a good. Yeah,
that was a mutual friend of ours.
We're quite far into the podcast to do this, but I was wondering to break it down of like what actually means for a child. Their parents die, they've inherited the farm's worth £2 million. What does that mean for them on that day? What do they need to do on their parents have died?
Okay. So
need to arrange a funeral and do all that stuff first. Don't worry about the money, Iona.
Yeah.
What you mean is how much does it cost them?
Yes.
Yeah, I agree.
What do you think of it?
We said what should they do in that day that their parents have died? It's like, well, don't start
Yeah,
phoning the accountant going, how much am I getting? It's very
obviously
crass.
Don't mean the day.
Very crass. Wait till the next day.
Sleep on it.
It's amazing how quick you get around to that subject.
Yeah,
you know.
absolutely. Hey, it tears a lot of families apart, I'm sure. That's why I say we were always so lucky that my inheritance, this isn't some nonsense. My inheritance was a Isuzu single cab pickup. It was worth £1,400, and Meg the Doug. That's my inheritance.
So simple.
My sister didn't fight me over it. She's quite happy. It was fine. You have it. I don't need a pickup.
Just let that go.
It was good. No arguments. It was fine.
Yeah.
Well, you've kind of raised another subject that we'll talk about, maybe the double cab.
Have I get taxed you? We need to talk about the pickup. I thought I'd put my foot in it there. I'm due tax on that. Price of sheepdogs these days.
No, you're fine. You're fine. So if we get back to the assumption that the first £1 million covered, we'll avoid the complexity of the nil rate bands here. So let's say you've got £1 million covered with APR.
Yep.
The second million is 50% relief. So you'll pay £200,000 of tax on the £2 million farm. Okay. So son has inherited that.
Yep.
And he's got the stress and all the rest of it of taking on the responsibilities. So that probably happened in the second death. So that's he's on his own.
Yep.
He'll have 6 months to pay the tax.
That's what I was going to ask. How long?
Yeah.
So he's got 6 months to find £200,000.
Yeah. And the tax has to be paid. So if he's in that situation, how does he raise the funds? And it's going to be selling a bit of the land, perhaps, or probably,
or borrow against it.
Absolutely.
Like you can borrow, and in most
So
banks,
he could borrow £200,000
easily. If you own £2 million, if you own it, because one thing to bear in mind for a lot of people is, if and tell me if I'm wrong, if you own a £2 million farm, but the bank owns half of it by way of a mortgage, that's deducted before the total amount you're due. So actually, you'd be due no tax if there's $1 million of it in a mortgage. Am I right in saying?
Yeah.
Because you take on that liability of the debt.
With you.
So any debts are taken off the assets before they work out the final total.
So if it's like a generational farm and there's no mortgage on it, you've got £200,000 to pay. It's basically just like taking out a mortgage.
Well, it's basically a business
You
loan.
borrow £200,000 and then you pay it back like you would a mortgage.
Over 20 years,
Yeah.
So actually, this is not, people might go up, it's not the point of the thing, the principle of the thing.
No, absolutely not. But I'm just trying to see,
200 grand.
Like for me, I'm then like, I can see how people could actually manage that. Whereas I feel like initially with me with all this,
if you have
I was
to
like,
think 200 grand.
how is anybody ever doing this? For me, I'm like, all farms are going to be sold. Whereas there are ways.
A bank would easily give you 200k.
You've got to be careful though. What you're talking about is right. An offset of borrowings, etc. But you might have the farm in the name of the parents, and the business has
the debt.
And
that screws it up.
Yeah. You've just got to be careful with the offsets there.
It's a minefield.
Yeah.
No wonder. And like, I'm not saying farmers are intelligent people because they're running, and that's sometimes I think the public don't realise how clever farmers are because they're running multi-million pound businesses that run on the finest of margins.
Absolutely.
And if you're not on it, the clever ones on the ones that aren't smart aren't still doing it. They're going all the time.
Yeah.
But it's still a thing. You just want to go out there and work and farm. And it's a wee thing like that could easily trip you up.
But you've got to respect the knowledge that they have to run the farm and to run it well. I'll often have a conversation with my clients and say, listen, I can look at the figures, I can point out where I think you need to look at, but don't ask me to come and run your farm because I just couldn't. And the technical nature of everything now, the focus that there is. It is a definite business in today's world, whereas in the past it was a lifestyle often. But today it's a focus, it's a business for sure.
Massively.
Yeah.
The amount of money that's turning over and changing hands, definitely. So to go into another question, Iona, do you want to give us your one that's kind of controversial, actually?
Okay.
This one here.
Most foragers don't supply sheep and cattle with enough cobalt, copper, iodine and selenium, critical to digestion, immunity, reproduction and growth. When it comes to supplementation, there's a danger of under or oversupply. But when bolusing with Animax Tracesure, you can be sure every animal has enough for up to 6 months in one single application. Animax, giving what it takes.
As a new entrant trying to get up the ladder and buy more land, it has always been a difficulty trying to compete. Farmers who have inherited their farm at known financial cost and are able to get a loan to buy more land secured versus their own land, they are always able to borrow much more than new entrant. Will this not make it more of a fair competition between new entrants and multi-generational family farms?
When I read it, I'm like, it's almost similar to my situation, but like I don't want it, but that's why I got Iona to read it out.
Yeah.
Does it benefit folk that are trying to buy land? I don't know. I don't think it. I tell you why I don't think it will. Let me just say first, and why I won't go on about it. If my point of view is that land is land. I think even if it takes a knock for 6 months, it's still going to keep climbing. Yeah. That's what I really believe. Yeah. I don't think it's going to make any difference to the price of land.
No,
to be honest with you,
I don't think it will either. I think there's the theories that land might need to be sold to pay liabilities. If everybody's in the front foot and planning ahead and the borrowing option is there, then there will be an impact, but I don't think it's going to change the world, and I don't think it will change those circumstances by any dramatic means.
No.
I don't think it swings it in anyone's favour away from where it is now.
Yeah, because land prices are never going to come down enough that people can coming without from nothing can afford it. That's the reality.
Yeah.
Because the deposit you need, like the cash you need in the bank,
Absolutely.
Yeah.
How does anybody get that cash? That's like, okay, if you're borrowing against land to get 200 grand, whatever, or to buy another farm, and you can work with that. But actually, to have a deposit in the bank is mind blowing. I mean, we're trying to do it now. It's mind blowing.
Absolutely. That's tough.
the
That's a
thought- for
discipline.
us to buy £1 million place, we need 300 grand cash in the bank.
Yeah.
Do you know what I mean? Who's got 300 grand cash in it? Even big time farmers don't have 300 grand cash in the bank.
Exactly.
Do you know what I mean?
They use their current asset base to go on.
Yeah, it's insane. You need to make nearly 500,000 to have 300,000 in the bank. That's the problem.
I was just going to also say, because I've heard some people on the radio and stuff talking about this as well, is that other businesses have to pay this. They've always had to pay it when you're buying, when you're purchasing businesses. I know why, but why is farming different?
Yeah, okay. Well, I'll have a go at this one then. The big difference here, I'll tell you the most obvious difference is, right, those businesses run on the basis of, right, say for us here, we pay X amount, £2,000 or £1,800 a month rent for this, okay?
Yep.
It's all costed in that returns me a profit, or it should return me a profit based on sales excess. See the value of land?
Yep.
It does not return the amount. The land that the farmers work does not return to them the
value of
proportionally
it. Yeah,
the value
absolutely.
of it.
Yeah.
Especially like your arable farms in England where land could be 20,000 an acre. I don't know what it is down there. That's never paying back. Whereas a business, if someone buys that business or they buy that warehouse or whatever, that is literally, it's all costed and it works.
Yep.
Yeah, land is just this daft thing that farming doesn't make any bloody sense. It doesn't make any sense. You knock your pan in and make no money, and you have this, you're a millionaire on paper. And that's what crushes people. And we've spoken about this on here before. It's generational. You cannot be the one to let it fail. And although that £1 million is there any day you want it, it's not really there.
Yeah.
Because the shame, and it's unfounded, I will say, but the shame that people put upon themselves as being the one that's lost it all, it means that they can never touch it, so they run themselves into the ground. It's a mad thing, farming.
Yeah,
Like-
absolutely.
Yeah.
And we talk about returning capital employed. So you look at a business and there's a value to a business, and they look at the profit and what they're getting back on their money that's invested in the business. See, if you started to think about that too much with farmers, you know, you just wouldn't. You know, you don't go there.
No.
But it's a lifestyle and to an extent, but they have to run it as a business now. That every aspect of the business is really important. And we go back years. We used to do presentations to clients, and you look at the profit and loss account, and you would say, right, listen, see if you go down every line, and you can make a 1% difference in every line, then that adds up to a good number of percentage points at the bottom line. And it's the fine detail that makes all the difference to a business and the return you can get in the business. And then one other very strong point, but the Labour approach to this budget was they were talking about the working person, you know, the definition
Which
of
they
working
couldn't
person.
define.
Exactly, and they're not going to affect the working person. Well, who works harder than farmers?
Yeah, literally
I mean,
nobody.
They perhaps should have targeted this at working people who have investments and assets that they've managed to save instead of business assets, because that's what we're targeting here. It's business assets that people are using to run their business, and they're getting a low return on capital employed. You know, just to close that circle there.
Yeah.
But couldn't they have done, I mean, I suppose most farmland is farmed. I'm trying to think, you know, even if businessmen own it, I suppose most of it is still farmed in some way. It'll be rented out or done, you know, it's bought as, because I was going to say, couldn't we target people that own farmland and don't farm it?
That's
But then it's,
but
you can change overnight.
There's money coming out
know.
of the city where people are going out and buying farmland to put it into an environment where there's a lower inheritance tax liability. So that's actually, you know, a softer target than the true farmer. You know, so if they want to target these people, put your £1 million to £4-5 million, and your normal day-to-day farmer will keep going.
Yeah.
And
Do you not think that threshold's ridiculous? Like,
Yes, yeah.
Like not just the threshold, the fact she's spouting nonsense. Like, and they should be held accountable for this nonsense they spout sometimes in Parliament.
Yep.
Well, misleading Parliament. Like, I'd love to see where she gets this 73% of farms won't be affected. I'd say where we are here, just now, and I've said this before, is one of the cheapest places in the UK. Maybe not the whole UK, I don't know everywhere, but certainly one of the cheapest places in the UK to buy a farm and to buy land, which is mental because it's amazing here. But you're not getting anything for £1 million here.
No, exactly.
No.
That's it.
Like, so the rest of it must be crazy. You know, I bet there's loads of people, especially maybe in that England and that sit on not that big a farm that's £3 million.
Absolutely.
You know, and this is what 3 million. I think I said last night. Is that 400,000 roughly? Of I mean, it's a big done. Even if you borrow it against the farm, it's some repayment to find.
Well, borrow it or whatever you do. If you're exposed to that, it's a cost. Pardon the pun, but it's dead money. You know, and you know you end up repaying that.
Pun.
Thanks.
Very good pun.
But you're repaying that over 10, 15, 20 years. You know?
Yeah.
Just tough. It's just bad karma. You know?
And when it comes back to the point I made earlier, like, it's a £3 million farm, but it's not a 3 million. It's not returning what a £3 million business.
No.
You buy a £3 million business, your returns are damn sight better than buying a £3 million farm.
Well, you don't buy the £3 million business until you're happy about the profit it's generating. You know, and you get your formulas and your ratios that you really put a lot of thought into before you pay the money. You know.
Yeah. And someone else wrote in actually and said a good thing where it's like it's only worth 3 million when they die. You know, it's only worth 3 million. You know, as it is and what you're doing, it's not worth that to you because you're not making that money out it. You know, it's worth 3 million when they die and someone values it. And
that's a thing I will raise with farming families that I act for. You know, there can sometimes be a bit of a discussion about, you know, 2 sons farm the farm and 2 daughters, you know, they're getting nothing out of it. But they've had a chance to go and, you know, develop their careers and develop, you know, ability to earn. These boys have got to work. You know, they've got to work hard to get the return out of that farm. Even though it's worth a lot of money, it's still hard work. You know, they've really got to push themselves. So, you know, there might be restrictions on what the sons can do with the farm. You know, you can't just sell it, cash in and run away and enjoy life. But it's a big factor that it's an imaginary amount, you know, in many ways.
Yeah.
I can imagine there'll be like a lot of lobbying and stuff going on. Do you think the government will be open to changes?
Unlikely.
No chance.
Unlikely. I think
no chance.
You have to expect NFU and other bodies to be really pushing hard here, getting a message across, but I can't see them backing away from this.
I can't. And the biggest problem we have is, and you read any forum, they've got the public on side. Like, the public look at that budget and think, oh, that was quite a good budget.
Yeah.
Do you know what I mean? There's a lot of the 1.2 billion to the post office scandal, which I agree with actually. Big wins a lot of points. The blood scandal victims, the money to that wins a lot of points. Employers, because people don't like employers. The masses,
you're right.
The masses don't like employers.
Right. Yeah.
So like employers.
But what you don't realise is you need employers for employees.
Well, that and putting more costs on employers has a knock-on effect to everybody. Like everybody, we need business. Like, but when they see it's that, when they see it's farmers who, if you read any forum where folk are talking about it, they say the same bloody thing. It's like, oh, boo-hoo, you only get £1 million tax-free. And
like, you don't get
they
it.
don't get it. And I know it's easy for us to say.
Yeah, of course it
but
is.
I mean, it doesn't impact me. Like, I have no, it doesn't impact me. Folk have said to do with tenancies and stuff like that. Fair enough, but it doesn't impact me directly. But I can still see why farmers need protected and why this agricultural property relief was so bloody important for. Let's go back into food security and talk about that.
Yeah,
it's like we start losing all these bloody skills to farm because, like, there is going to come a day, and we don't want to call doom and gloom, but there's going to come a day when this food we're getting from elsewhere is going to dry up or stop through one reason or another, and they're going to turn inward and say, what can you guys do for us? See all these SFIs, these wild meadows and all that, get that ripped out.
Absolutely.
And get crops in there.
Yep.
But some of the directional paths for subsidy support and all the rest of it, it's just not demonstrating, and have no appreciation of the importance of food production in the UK, you know, and it is going to turn around and bite them, you know, at some point. And the sooner that happens, the better.
There's a lot of people saying it's a bit of a land grab and try to crush the farmer again, which I don't think it is try to crush the farmer on this, and some might disagree with me, because I'll say why I think that. Surely, if people have to sell land, who else is going to buy it other than mad people like us that want to farm?
Yeah.
You know, if the incentive is away, who other than mad people like us is going to buy it? Maybe I'm not seeing it.
No, that's exactly it. You know, it's your neighbouring farmers. It's the land is still sought after. You know, and there will be, you're able to sell the land. You know, in different styles of land. Often you'll look at who's your neighbours. You know, and who's the potentials that might buy it. But it'll still sell.
Yeah. Well, that's but what I mean is, it will still be farmers that buy it.
Yes,
generally
absolutely,
speaking,
absolutely.
and arguably more so now because there's less incentive for outside money. Would that be fair, or would outside money still buy it regardless of this change?
Not to the same extent. No. In fact,
so that might be a positive.
It'll put a stop in that. You know, they'll rethink that. You know,
there we go.
Under these rules.
Well, that's got to be one positive to take out of it, definitely. If a farm's worth 3 million, set up in a 3-way partnership, would that divide the burden? So I suppose it's saying set up, that would be the business. But let's say for this talking point, the farm is put into 3 people's names. Would that divide the burden when one of those partners dies?
Yes.
Okay.
Yes. Aye, so is
that not the easy fix?
If it's but it's then you're looking at the ownership, the title, who owns it, and you know, it's part of the planning. If mum and dad are the older generation and they own the farm, then it's, you know, let's look at transferring a share of the farm into the next generation. You know, so yes, absolutely, it's spreading the ownership.
So you could, so let's say for example, you have the £3 million farm, mum and dad own it, or let's say mum and dad own it, and they want to put it. There's a 2 brothers or 2 sisters, whatever. Could one of them drop out and the other 2 take a share to split that 3, or split it 4 ways even?
Yeah.
And now their shares diluted to a quarter. Let's make it 4 million for my easy maths.
Yeah.
So they have £1 million each. So that you could do that.
That's absolutely.
And really, it's only costing you is your fees, your accountancy, and your solicitor fees to set it up.
100%. You know, that's one of the solutions that will come along. You've got to look at the parents. You know, 25% of that farm, that's £1 million covered with the APR that's there. Farm value, we talked about this earlier, might move a bit, but it's definitely one option for them to split that down and try and minimise or align their ownership and interest in the farm property and align it with the IHT rules.
And a follow-up with that one is, does it reset for each parent? So if say my dad leaves me £1 million and my mum leaves me £1 million, is that 2 individual cases?
Yes.
It is?
Yes. Yeah.
Okay.
So that's the individuals, you know, so...
but the problem will be, generally what happens is the dad leaves it to the mum, and then the mum leaves it all to the kid.
Often it's mirror image wills, so that first to go leaves it to the remaining spouse. Of course. So there's a bit of thought process and will drafting as part of all this.
Yeah, actually you're far better bypassing that, or leave half that way, half that other way to split up the...
Absolutely.
Because is the tax another one for me? If you own this £2 million farm now this time, and you split it in half goes to your wife, your spouse, and half goes to your son or daughter, do either of them have to pay tax on that?
Yes, because it's your estate that's had a £2 million farm.
Yeah, okay.
You know,
so they get half the liability each, really? Oh no, is it the case of that before the funds are even released?
There might not be any funds to release. True. You know, you might just have the farm ownership, and in the truest sense, then the liability would be split. So let's rewind. You've got farm going half to
the spouse and half to the son or daughter.
Right. So anything that's left to the spouse, there's no inheritance tax on.
Okay.
All right.
So then there's only inheritance tax on the million, but in this case it's exempt.
Yeah. Yeah.
So that's another good one.
Absolutely.
And then when the mother passes or the father passes, that £1 million is exempt as well.
Yes, exactly. She's got £1 million.
There is going to be some workarounds here.
I would say
Absolutely.
my biggest feeling is farmers go and speak to your accountant.
Oh, definitely.
Make an appointment with an accountant.
And listen, Graeme's details are in the bottom of this. In the chat, and if you're watching on YouTube, the details are there. If you're listening on audio, they'll be available as well, and we'll put something on Facebook about it as well.
Yeah.
Your phone will be off the hook.
So all I would say though is we're early days. We're 24 hours in, or we're probably 30 hours in now. So there's initial thoughts. There's interpretation, this is not in statute yet until it goes through the Finance Act. I don't anticipate it will change, but thinking will change, thinking will develop, and there's a bit to be done there. So it is a case of speak to the accountant, gather the thoughts, understand where you are, and then you can develop your planning from there.
Yeah.
And hopefully we've demonstrated there is a lot of options.
I feel like you've given me hope with the whole situation for people. I feel like I know it's crushing for farmers, and I'm not taking away from that, and people will be going through a really tough time, but I feel like there could be light for some people.
Yeah,
absolutely.
A question re the capital gains tax for me as well. Just if you inherited the farm from your parents, and you're now stuck whether you pass it on to your kids or sell it, is your capital gains on that worked out from the value when you inherited it?
So if you've inherited it from via your parents' will, so they've passed, then it takes on that day value. So it is the value at the date of your parents' passing. This is the point I was kind of referring to earlier. If it's gifted during parents' lifetime to you, then there's the gift of business asset relief, which defers the gain, which means you then take on your parents' history in terms of that farm. So their value might go back to 31st March 1982, and you're stuck with the 31st March 1982 value instead of...
That's going to screw so many folk. Because previously, before this tax, then you could inherit that. You could inherit the £2 million farm, and from the day you inherit it, it's valued at $2 million.
Yep.
If you sell it for 2.2, you're only due on the 200,000.
That's right.
Whereas if you're gifted it and it was bought in the 1970s for £100,000, and you sell it at 2.2, you're due for 2.1 million in tax.
Absolutely. That's
exactly
the
big problem with gifting it.
Yeah.
Over inheritance.
That's the downside. Yeah. But you've got
that's only if you're going to sell it. But
you've got to weigh up, what is the inheritance tax exposure we're dealing with here, and is it worth doing the gift and resetting it?
Yeah.
God, I find it fascinating.
It's just doing the maths.
But I feel like I want to
maths.
say to farmers as well, I feel like don't get overwhelmed yourself with it, because I feel like farmers, you do so many jobs. Like you're an accountant, you do your books, but it's like seek help, go and speak to an accountant about it, and they'll be able to speak in a way that makes it make sense.
Yeah, exactly.
Definitely. Is there anything else you want to say about that?
I don't think so. As long as we've come across that there are options, and people shouldn't get overly stressed at the moment. Go and chat to their accountants. Firstly, get a feel for where you are in terms of the exposure to all of this, and then develop the plans from there. And there's lots of options. There's the gifting, there's the insurance, there's trusts. Trusts are a bit complex and can be quite expensive to put in place, but they might have a role, particularly if the family's a bit younger.
Yeah, and it's a large value.
Yeah.
Yeah, okay. And just for anyone who wants to reach out to you, I mean, take it you're always looking for new business.
Absolutely, yes.
Yeah.
Happy to speak to anyone.
Dains quite a big business, UK-wide, or?
So, give you a bit of history.
Yeah.
We were William Duncan and Company, and we started in 1919. I wasn't there in 1919, just to confirm that. And there's a lot of consolidations in the accountancy profession. There's a number of firms just taking over other firms, and we were involved in a number of conversations, and nothing quite fitted. It just wasn't right. There was more problems than there was solutions. We then got to know Dains, who are a Midlands-based company, and they had the same mindset as us. They had the same values, the same culture. It was all about valued relationships, working and succeeding together, fairness, integrity, which is the core to what we do. So we merged in with Dains, who are very prevalent across the Midlands in England. We now spread across the Central Belt in Scotland, so we've got offices in Ayr, Kilmarnock, Glasgow, Dunfermline and Dundee. And there'll be other additions coming into the equation. So what does that all bring to us? It allows us to have a real depth of knowledge that we couldn't have had as William Duncan and Company.
Yeah.
You justify having the real experts to the point where it blows you away with the depth of knowledge that some people have. And that gives us a confidence to go to our clients and say whatever's in front of you, we'll be able to support you in a tax and accounting way. So that's where we've come from. We're now Dains Accountants. It's not a name that's been commonly known in this area, but hopefully, we're managed to put the name out there. The important message I've been putting out to our clients is, yes, we're now Dains Accountants, but it's still me. It's still the guys. You're still dealing with us that were William Duncan and Company.
Yeah.
So and that's actually going down quite well. The team are benefiting because we can justify having an HR person now. The training is totally focused, whereas we used to roll the team out to 5 training days a year. They would go along. In fact, I would go along, and you would sit there and you'd listen to a guy that for 2/3 of the day you didn't understand what he was saying to you because you never come across that specialist knowledge. Whereas now it's a real focused training regime.
Rather than being jack of all trades, you can have people specialising in certain areas and being on that all the time.
Exactly.
Yeah.
Exactly.
And you at the Air Office, are you?
I'm in Kilmarnock.
Kilmarnock
office.
Yeah.
So
couldn't be handier. And actually, there's a lot of farmers that don't have agricultural accountants.
Indeed.
There's a lot that don't, and now might be the time.
And we see that, when they come along and they speak to us, you can almost sense straight away that they've not had that support from the agri specialists. And it's just sometimes the way they're set up or how they've been guided. So no, we're happy to speak to anyone. One of the key things for us is our agri team. That's all they do. That's all they work on. I've got a portfolio beyond agri, but everyone who's doing agri has, not everyone, I would say 80% of us have all had agri backgrounds. I grew up on a farm, and I was the youngest, so it was kind of divert me away. But interestingly, my oldest brother's friend was an accountant. I quite listened to him, and I thought, that's quite cool. I could do that. I quite like maths. So I did, and went through the journey, got my qualifications, went to North of England to get my professional exams, and I got a phone call from this very friend to say, what are you up to? We've got a space at William Duncan and Company. Would you fancy coming back north? So that was Robert Ferguson, and the two of us have worked together. Now, Robert stepped down as managing partner last year, and I took over. Now, it's incredible, 30 years further on from the point I'm sitting listening to him thinking, that's quite cool. I could do that. So it's just amazing how circles happen.
Life, how it can take you those places. But no, I think you'll have won a lot of folk over there. And then one final wee anecdote. Do you know, I got a conditional to do actuarial, I think it was actuarial maths and statistics at Heriot Watt when I was at uni. I was obsessed with maths.
Right.
Loved it.
So here's my take on that. Actuarial maths and actuaries actually make accountants look exciting.
Aye, that was another part of it. Part of the reason I decided not to, one was the amount of debt. I went to the open day and I spoke to a couple of folk, the amount of debt they were in living in Edinburgh. And the only place at that time you could get a job was either Edinburgh or in like Manchester, London. There was no other place in Scotland other than Edinburgh really you could get jobs. And it was all big city stuff. I just thought that's not for me.
But that's a seriously
it's huge money.
Absolutely.
I think the starting salary was like back then was 70 grand.
These guys make serious money and they're good at what they do. One of my relations is an actuary and I quite enjoy the chat with him, and I'll remind him that he makes accountants look exciting.
Yeah.
But you're an unconditional. That's
no conditional.
Conditional, right?
Because I had to do my 6 year and but I only needed I can't remember if I needed the advanced higher maths or something like that to get it. I just needed 1 grade.
Right.
But it was sort of halfway through 6 year. I went to the open day and just says no
for you.
Oh, the boy was in like 30-40 grand of debt, student loan debt, and it was 6 years. It was quite a long course as well. I think it was 5 years.
Yeah.
And like had to live in Edinburgh, and the only place to get a job was Edinburgh and all that. I thought, I'm just like a farmer boy, man. This is not for me. And that's how I ended up joining the post, as you do. Desperation.
Aye.
When you don't decide what you want to do with your life, you end up in funny places.
But things happen in life that steer you in certain ways. And I think it's important you do what you want to do in life. I say that to my sons, no matter what it is, if you want to do it and it's a real interest you have, that's important.
Oh, absolutely. Absolutely. Like, that's one thing I said when I left the police. I says to my gaffer, at 30-year-old, I handed him my resignation. I says to him, do you know what's mad? I says, I'm 30 years old and I reckon I'll never work another day in my life. That's what I said to him. Because like everything I do, it's like I love it. That's what I want to do.
Yeah,
and I genuinely said that to him. I said, I'm 30 years old and I don't think I'm going to work another day in my life. And so far, touch wood, it's been true. Some days in here by Iona, pushing it. Anyway, Graeme, thank you very much for all your time there. We'll put all your details in the show notes below, and anyone wants to reach out to you, hopefully you'll get some folk coming over to you, but then you'll need to expand the business even more.
We'll do that happily. Yeah.
Thanks, mate.
Thank you very much.
Thank you.
And we're back. Thanks to Graeme there for a fantastic...
He spoke so well.
Yeah.
Like, so eloquently, easy to understand.
Kept it simple for us.
Yeah, like, I have no, like, understanding of any of this, but...
We did forget to ask him about your situation. That would have been good to use you as an example.
Yeah.
In Chris Flat.
There was so much, like...
Yeah, there was just so much. And we missed the double cab pickup.
So what's that? I don't know
Graeme
that.
texted me as soon as he left about they're changing the VAT on double. So right now you can reclaim 100% of the VAT on a double cab pickup. Now they threatened to do this. The Tories actually threatened to do this.
Right, okay.
And stopped. I thought it was because the car manufacturers like Toyota, etc., went off the head. They probably threatened to pull their involvement in UK. Well, I suppose they can't because we're such a big buyer. But I thought it would be maybe them on their back. They'd realise this is ridiculous. But it seems like it's happening. And I believe it's as of April 25 or 26. I'll put it on the screen whatever the details are for that. You can no longer buy a double cab pickup and claim the VAT back.
That's massive.
And every farmer
Yeah.
drives a double cab pickup.
Yeah.
Like,
shove stuff in.
My big problem is the Waynes, it's the kids.
Yeah, you have to have the seats.
We need a double cab for the kids. So we have no option. We're going to buy a double cab. I dare say there's plenty of farmers where actually, when they go back to a single cab, they'll quite enjoy the extra space they get in the
We
back.
had Land Rover Defender for years.
Did you?
Just the wee 3 seats in the front,
Oh,
leg either side of the gear stick.
Yeah, that's right.
Yeah, it had wee things that you pulled down to open the vents. Like there was no air, like anything with air. You just had wee vents.
Yeah,
when
yeah,
it was
yeah.
got
Oh,
one.
to actually let the air come in through the windscreen.
Yeah, aye. You just opened the vents. It was great. I loved it. Dad only got a pickup. It was only a few years ago, and we were all absolutely gutted because we loved the Defender.
Yeah, it's just, I suppose, not practical. A
And even
three-seater's not practical with
going
a
up to
family of-
Dalmally, and it was like a glass window, and we would have the tops in the back of the cab. Like the tops would be right there.
Oh, did you? You had a partition though.
Yeah. But we could open the window.
Oh, right.
So you could slide it across and be right in.
And the
at
tops would be enjoying the journey with you. Some memories, eh?
I know it is.
Aye,
It is.
some memories. So yeah, the thing with those Land Rovers, they just go up in value now. They're
know.
collector's items.
Yeah.
But yes, but ND's already got a double cab pickup. Of course, it doesn't. It's not going to affect you, but it's moving
Or
forward.
could they buy it right now? Buy one right now?
Yeah, you could. I think. Yeah, the cut-off's they need to delay it. I think it must be 26 a cut-off because there's so many double cabs sitting to be sold. They need to give companies time to.
True, because
to
it will
sell them.
impact. It will impact
Massively,
them.
massive impact on Toyota,
Yeah.
on Isuzu. They have to sell them and then start bringing in more single cabs.
Yeah.
Because that's what people are going to want. So interesting to see how it all goes. But hopefully you got a lot from that. Please do leave us comments if you've questions we can maybe follow up on next week. Then drop them a thing. If you think we've said anything untoward, do not be frightened to criticise. I am always very open this. I'm always open to being criticised because I don't know everything. We don't know everything. We make mistakes. We say the wrong thing or we get the wrong end of the stick. And this is a sensitive subject, so do not be frightened to come in hard on us on the comments. We're big boys and girls and we can take it and we'll learn from it.
I'm not as much, but I'll try.
Yeah, don't be personally rude. Some of these can be bloody personally rude and it's ridiculous. I mean, that annoys me. Be nice to Iona, okay? She's a great person.
Me?
Stop it. That's enough. That's it. The one compliment. That's it. She's a pain in the arse. Anyway, on that note, I've been Cammy.
I've been Iona.
And we're all fed
Fed
by
by
farmers,
farmers.
which I wish the government would remember.